A very good evening to you, and from wherever you're watching us from, welcome to Metropol Primetime News on this 22nd day of March. The year is 2022. My name is Tabitha Muthoni and our sign language interpreter is Susan Otieno. But first, let's have a look at the headlines tonight. Equity Bank posts record profits. Growth in balance sheet up to 1.3 trillion from 1.0 trillion Kenya shillings. And a report that shows Kenyans lack financial literacy. Number of digital loan borrowers increases to 59%. And Kenya's increased appetite for borrowing. Risk assigned to Kenya's sovereign bonds by international investors shoots up in the last 9 months. Welcome. We begin with the Equity Group that has posted 98% growth to 39.17 Kenya shillings for the full year ended December 31st, 2021, compared to a similar period the previous year amid the adverse effects of the coronavirus pandemic. The strong performance was driven by an increase in the net interest income, which gained 25% to 68.8 billion Kenya shillings, up from 55.1 billion Kenya shillings. Expansion in its loan book also contributed to the lender's profitability, rising to 587.8 billion Kenya shillings, up from 447.8 billion Kenya shillings. Announcing the results, Equity Group Managing Director and Chief Executive Dr. James Mwangi noted the performance came against a backdrop of uncertainty, saying the group focused on supporting customers.
The NSA-listed lender posted 98% to 39.17 billion shillings profit after tax, compared to 19.7 billion it posted the previous year. Net interest income grew by 25% to 68.8 billion shillings, up from 55.1 billion, with the lender registering 23% in their loan book to 587.8 billion, up from 447.8 billion shillings.
When you look at the performance, especially of our loan book, we are very lucky, because we can only say we are lucky that we are attracting customers of the right character and the right ability to pay. It seems there's an aggregation into equity because of the relevance, because when you look at the COVID-19 book, the moratoriums we gave, and over 70% repayment of that coming through. So we are a bank that attracts the best. We are a community of members that attracts the best, because repayments of loan is a function of the character of the customer and the ability of the customer to pay.
Now, with this huge lending opportunity, cross-border, dollar-based loans, we can see the greatest opportunity in terms of growth. So that is where we are seeing Anthony derivatives. We have seen derivatives now kick in. Why? Because of commodity prices. Commodity prices are at a very high level. The mining community want to protect those prices. We have been shocked by the level of interest in derivatives, and that is a very huge opportunity. What all these I'm talking about are non-funded income opportunities. So we are likely to see the quality of earnings continuing to improve as we shift more and more.
Equity Group now joins other lenders that have recently seen a rise in their profits for the full year ended December 31st, 2021. Absa Bank Kenya led the team by recording 161% growth to 10.9 billion shillings profit, compared to 4.1 billion shillings it reported the previous year. KCB Bank followed, gaining 74% to post at 4.2 billion shillings profit before tax from 19.6 billion shillings, while Standard Chartered Bank reported a 66% growth to 9 billion shillings, up from 5.4 billion it posted in 2020. Stanbic Bank closes the group by posting a 38.8% high to register a 7.2 billion shillings, up from 5.19 registered in 2020. Collins Ogutu, Metropol TV.
Now, according to our digital lender Tala Money March 2022 report, Kenyans want more guidance on saving effectively and how to start and grow a business. The research, whose goal was to ascertain Kenya's financial literacy levels, health and resilience, surveyed over 423 customers from the fintech's client base. The report shows that in the last 6 months, 59% of customers have increased their borrowing, with the top reason for 78% of the participants taking loans is in business related to either pay business expenses or add stock, supported by the finding that 8 out of every respondent have side hustles other than their main income source. Here is our reporter Claudio Tieno with more details.
While presenting the Money March Report 2022, the user research manager at Tala, Teddy Kahiro, the report's main objective is to help understand their customers' need and how to evolve and meet their needs.
That they already know that, hey, they need a safety net for future. They understand that there are emergencies that they can be able to they encounter, or financial shocks, that they can actually rely on savings as opposed to borrowing again or going to a digital lender to borrow.
According to the report, in the last 6 months, about 45% of Tala customers save regularly by putting money aside, 42% save occasionally after expenses, 9% rarely save because their expenses are equal to their income, and 4% rarely save because their expenses are less than their income. According to the report, in the last 6 months, about 45% of Tala customers save regularly by putting money aside, 42% save occasionally after expenses, 9% rarely save because their expenses are equal to their income, and 4% rarely save because their expenses are less than their income. On the same note, Tala customers have diverse reasons for borrowing, where 43% borrow for business expenses, 35% borrow and add stock to their businesses, 20% for school fees, 19% for utilities, house and personal expenses, while 6%, 4% and 8% is directed to medical expenses, construction and other needs respectively. The digital lender saying their sustainability is still on a good path.
As Tala, we have been doing that. We have not seen any sort of default. We still do business as usual. And I think one of the key things that we're trying to do is provide more value to our customers and ensure that those value are also seen. And one of the report you have seen that one of the value that we've done is launching of the custom due date, where we're giving customers flexibility of choosing when to repay their Tala loan.
That's how we have already been operating. So if you think about non-performing loans, or loans that are in default, what can be recovered is 3 key things. So there's a principal, there's an interest, and the cost of collection. So that has been how we operate from the start. So it does not change how we're going to be operating moving forward.
Still on the same saving behavior among Tala customers, 45% save regularly by putting money aside each time, 42% save occasionally after expenses, 9% rarely save due to equal expenses with incomes, while 4% rarely save even though expenses are less than incomes. An indicator from the report shows that customers need financial literacy and more guidance on investments by 24%, save effectively by 24%, and 21% on healthy borrowing. But how has been business since the amendment bill giving the Central Bank of Kenya powers to regulate the lenders?
With the regulation now, we're going to see a reduction on that and ensure that they do, the processes that are in favor of our customers as well as the business are also implemented.
There have been rogue digital lenders in the market, and we expect to see a bigger impact in terms of the regulation on them. However, with Tala, this is how we have been operating in terms of what is being defined by the central bank right now. So it doesn't really present a big change in how we are going to continue to operate, minus the fact that now we'll be working under the ambit of the central bank.
With Tala's Money March campaign now its 3rd year, the fintech has committed to promoting financial literacy in Kenya by providing financial education and training to customers through various platforms. For Metropol TV, I'm Claudio Tieno.
Thank you, Claudio Tieno, for that story. Now we move on, and last week, the World Bank approved an 85.8 billion Kenya shillings loan to Kenya to support its budget and drive physical, power, water and land reforms, even as the cost on Eurobond are double. The loan is the second tranche granted to the country after World Bank wired a similar amount in June last year under the Development Policy Operation Program, which lends cash for budget support instead of financing specific projects. As As things stand, the risk assigned to Kenya's sovereign bonds by international investors has gone up in the last 9 months, even before the Fed rate announcement, meaning that the country stands to pay higher interest if it floats a new Eurobond under the current market conditions. So what does this mean for Kenya's economy, and what is the possible impact on the taxpayer? Our reporter Mushian Njeri spoke to an economist and filed the following reports.
Speaking during an interview with Metropol TV, economic analyst Cliff Ortega says that Kenya is in need of the money to enable it to manage and retire the expensive commercial debt that has accumulated over the years.
Typically, the conditions are usually attached to, the key condition is that you use the money for what you borrowed it for. I think that's a standard clause, and obviously given our precarious debt situation, then the World Bank obviously will be looking over the government's shoulder to ensure that that money is spent as required.
He further added that Kenya's debt burden cannot be sustained in a short term due to continuous default on loan repayment, but it can be achieved in a long term if managed well.
Any loan, just even like for a family, but of course for a country, is a signal, obviously, to the global markets and to bilateral and multilateral lenders that things obviously are not rosy in the country. So the first immediate challenge that you have is obviously becomes more difficult and more expensive to borrow more. So we need to really get come to grips with that debt situation, and that's where people like the World Bank and the IMF come in to support the government from a fiscal support perspective.
Kenya had already received its fourth loan from the Development Policy Operations Facility, bringing the total amount borrowed to 371.8 billion. Kenya's increased appetite for borrowing, coupled with the runaway cost of living, continues to be an issue of grave concern for many Kenyans, a majority of who earn minimum wage.
That story was produced by Mushian Njeri but voiced by Cloudy Otieno. Now we move on, and the Teacher Service Commission Chief Executive Officer Dr. Nancy Macharia has moved to downplay widespread fears that the ongoing Kenya Certificate of Secondary Education KCSE examination has leaked. Speaking in Mombasa this morning when she led senior government officials in witnessing the opening of examination materials at the Kisauni DCC offices, Macharia said that the examination materials have remained intact, only that there were few isolated cases when it got exposed after distribution. The TSC boss, who was accompanied by Mombasa County Commissioner Mr. Lucas Kate, however, said that overall they have done better than in past instances and singled out Mombasa County for mention as being one area where there has not been any case of examination malpractices. She was quick to state that those who have been found trying to tamper with the national examination have already been taken to court. On teachers are found to have had a hand in the examination infringement, Macharia said that disciplinary action will be taken against them, and we cannot allow errant teachers to interfere with the integrity of our national examination, she was quoted saying, and adding that teachers have remained an important segment in the overall dispensation of the examination, as without them candidates could not be well prepared. With the ambitious competency-based curriculum CBC being rolled out, Macharia said that already some 60,000 teachers will be retooled to teach at the junior secondary schools in April. Some 229,000 teachers have already been trained on the new curriculum. The Democratic Republic of Congo will officially be admitted to the East Africa Community EAC next week, adding a 90 million market population for the regional trading bloc. The mineral-rich country has already established trade ties with most of the EAC member states through bilateral deals and at multilateral levels. The EAC Secretary General Dr. Peter Mathuki, in a letter to ministers in charge of the EAC docket, confirmed that the heads of state would approve the admission on March 29th. He said that they are in receipt of a letter dated 18th March from the chairperson of the Council of Ministers informing the Secretariat of the organizing of an extraordinary summit on the admission of the DRC into the EAC. Kenya's President Uhuru Kenyatta, who is the current chair of the EAC, is expected to preside over the summit that also includes President Samia Suluhu Hassan of Tanzania, Yoweri Kaguta Museveni Uganda, Paul Kagame Rwanda, Evariste Ndayishimiye Burundi, and Salva Kiir of South Sudan. Moving on, India's aviation regulator has placed the country's fleet of Boeing 737 planes under enhanced surveillance after a jet crashed in China. It said it has dispatched teams to monitor flight procedures, airworthiness, and operations. On Monday, a China Eastern Airlines Boeing 737-800 crashed in southern China with 132 people on board. Rescue teams are working at the site, but it is not yet known what caused the incident. The flight was traveling from Kunming to Guangzhou when it plunged to the ground and caught fire. China Eastern Airlines has grounded all its 737-800s. The crash of a Boeing jet in China on Monday is the latest crisis for the American plane manufacturer, raising the prospect of renewed regulatory scrutiny and confronting the company with another catastrophe involving its planes. The outcome of the investigation could weigh heavily on Boeing, which recently overcame years of troubles involving a newer variant of the single-aisle 737, the MAX, and has had long delays in producing and delivering the twin-aisle 787 Dreamliner. Thousands of 737-800 NG planes have safely traversed the globe in recent decades, and many industry analysts and experts were disinclined to conclude that Monday's crash indicated any fundamental design flaw. But Boeing's stock in New York fell 3.6% nonetheless, and shares of China Eastern also closed the day at 6.5% lower in trading in Hong Kong. The Kenya Plant Health Inspectorate Services (KEFIS) has stepped up field audits and facility inspections for more than 10 avocado growers and exporters planning to explore the Chinese market. In a strategic trade facilitation effort, KEFIS has completed the required phytosanitary assessments, and the trade facilitation undertaking is expected to unlock the export opportunity of locally grown fresh avocados.
Speaking at an official visit of Kakuzi PLC Orchards and Pack House in Murang'a County, KEFIS General Manager in charge of phytosanitary services, Dr. Isaac Masharia, said the National Plant Health Regulatory Agency is actively playing its part to support the export of fresh fruits to China once the local Hass avocado harvest season opens next month.
Of importance to us will be the traceability, ensuring that the products that we are dealing with come from the registered facilities, both the orchards, the pack houses, and also they have been fumigated.
The export of fresh avocados to China follows the early January signing of 2 protocols to facilitate bilateral trade, mainly the export of avocados and aquatic products from Kenya to China. Kenya's Ministry of Agriculture Cabinet Secretary Honorable Peter Munya and the Chinese Ambassador His Excellency Zhu Pingyan signed the protocols in Mombasa.
Well, the prospect is very, very encouraging. I mean, I think we've got to start off by actually really thanking the leadership from KEFIS, the leadership and the spearheading by government to get Kenya into the Chinese market. Yes, there's a journey, but we're walking that journey together, and there's every reason why we should be in that market. And if that is the case, the prospects are very good indeed.
Reporting for Metropol TV, Vanita Wandera.
Thank you, Vanita, for that story. Now, business professionals, policymakers, and entrepreneurs have come together to discuss ways in which more companies can get into green business during the 11th edition of the Kenya Entrepreneurs Conference on Trade and Development. The strategies proposed in the conference are intended to foster longevity, transparency, and proper employee development within business organizations. The summit challenges businesses and organizations towards sustainability by being intentional about having a positive effect on the environment as nations are rallied towards a net zero. While speaking during the summit at the Kenya Entrepreneurs Conference on Trade and Development, founder Sebastian Ginda said the summit is focused on bringing together like-minded individuals for a networking opportunity that allows for businesses to learn from each other. On the same note, Amika Kenneth, the regional manager East Africa for Bolt, said that this is the opportunity for the entrepreneurs to highlight their work and achievements and expand networks, as Bolt is also focused on investing more in electric vehicles to curb carbon emissions and lower transport costs.
We're already took a realization that Kenyans are very forward with adopting electric cars. So while looking and analyzing through the vehicles on our platform, we realized that we have a couple dozen electric cars. So last year, exactly 1 year ago, we put these electric cars and other hybrid vehicles on a separate category called the Bolt Green. And Kenyans have been demonstrating their forwardness as well in always taking more sustainable options. That category has done over 1 million rides. On our food delivery, we've partnered with various companies, including Arc Rides, to do electric bikes and electric tuk-tuks and electric cycling bikes to do food delivery. So your clean food is coming with clean energy mobility. So and we continue. This year, we intend to grow this by almost more than 4 times by creating these partnerships with like-minded organizations and investors that are keen on importing electric cars and other investors that are keen on creating infrastructure.
The idea is to bring in businesses and corporates to have a conversation about the preservation of our environment and just the entire ecosystem of sustainability, which is social, environmental, and governance. So making sure you have proper structures and systems and processes and intentionally practicing them in our businesses.
Residents of Majia Chumvi Land Adjudication Section in Chengoni Ward, Kwale County, are calling on the government to stop any activity on a disputed piece of land until all matters are resolved. The community raised concerns that since the land was declared an adjudication section in 2014, cartels have come in to take away land from the residents. According to the residents, the land, which measures over 60,000 hectares, belongs to the 3 clans of Mwamamundu, Mwayawa, Mwamundu Kichororo, and Wachanda, who have lived harmoniously for over 50 years, led by area clergy Frederick Kanato Ndaikwa. The residents accused a section of politicians from the area for colluding with officials from the lands ministry to allocate land to cartels. About 500 title deeds are set to be issued, even as the residents decry the move, saying they were not consulted in the process. They also added that the size indicated on the titles does not reflect the correct acreage of the disputed land. An independent audit further revealed that the committee was carrying out the land adjudication in their area illegally allocated themselves parcels of land which they have been ordered to return.
Tunaomba serikali ilete watu ground, waje wafanye verification ya mipaka. Mipaka kila mmoja ikifanywa verification, yule ambaye ilikuwa title yake alikuwa amepemewa mahali yake apewe title yake. Lakini yule ambaye atakuwa ameingia katika hizi shamba zetu za Mwayawa na Mwamundu Kichorora Mchanda, hiyo title inaiwe itafutiliwa mbali. Kwa hivyo mimi mwambi yangu kama viongozi ni kwamba tunataka amani na tumevumilia. Sisi tuliambiwa sisi mbari tatu tusifanye chochote pale. Lakini pale tutakuta kwamba Mwamundu wanaendelea kufanya mambo yao. Wote wanaendelea kufanya mambo. Tumechoka na mahali imefika hatuwezi kuvumilia tena. So tunaomba serikali kupitia ma-DC na machifu waje kwa ground. Wale wananchi tuko tayari sisi kila moja akasimame kuonyesha mpaka wake ili hii mzozo ikaweze kuisha.
And now let's cross over and have a look at how the forex market is performing. And now turning to the day's closing numbers from the Nairobi Securities Exchange, and BK Group Limited led the day's gainers to edge up 8.73% to trade at 29 shillings and 90 cents. Car in general followed with 8.57% to sell at 76 shillings per share. Olympia Capital Holdings gained 6.19% to settle at 2 shillings and 23 cents, while Home Africa Limited grew 5.56% to sell at 38 cents. Power utility firm Mema Limited ended the day with 3.92% up to close at 6 shillings and 36 cents per share. Turning to the day's losing stocks, and Liberty Kenya Holdings sank 8.81% to close at 5 shillings and 80 cents per share. British Oxygen Company Kenya depreciated 5.88% to sell at 80 shillings, while Sasini PLC shed 5.45% to close at 18 shillings and 1 cent. WPP Scan Group plunged 2.43% down to exchange at 4 shillings and 1 cent. Real estate firm Centum Investments has shared 2% to close at 12 shillings and 25 cents. Kenya Commercial Bank Group was the day's biggest mover with over 9 million shares. Telecommunications giant Safaricom hit nearly 4 million shares, while Equity Group Holdings moved above 1 million shares. Energy distributor Kenya Power moved about 800,000 shares as East African breweries closed the day by moving at least 300,000 traded shares. And now crossing over to Russia, and the conflict between Russia and Ukraine has a limited impact on China's grain supply and prices, although it has had a major impact on global agriculture and food security, according to Chinese agricultural experts. Russia and Ukraine are the main import sources of sunflower oil for China, but the most consumed edible oils in China are soybean, rapeseed, and peanut. Sunflower oil accounts for less than 10% of the total edible oil consumption in China. China does not rely on imports of wheat and rice, and are the two staple foods for Chinese people, the data from China Customs showed. In 2021, soybeans, wheat, corn, and barley that China bought from Russia accounted for less than 1% of the country's total import, though corn from Ukraine made up 29% of the total annual corn import, and barley just 26% of its annual import. Many of these imports were used to feed livestock. The conflict between Russia and Ukraine has hit global food trade and dampened expectations towards crop output, according to a report released recently by the United Nations Food and Agriculture Organization. If the impasse continues, global food security faces new serious challenges, according to the report. The director of the Agricultural Product Trade and Policy, Hu Bingjuan, said the important task of not breaking the red line of food security lies with China. He urged a long-term and steady development of domestic agriculture, reinforcement of modern agriculture practices to ensure the country does not rely on external forces for its food security and sustainability. And hundreds of multinational companies, especially those in technology sector, have withdrawn or halted their business in Russia amid its conflict with Ukraine. While the list keeps growing, at least 417 companies have either withdrawn, suspended, or scaled back operations in Russia. According to a list compiled by the Yale School of Management, which continues to grow with a sizable portion made up of tech. Tech giant Apple was one of the first tech companies to stop selling products in Russia. Microsoft, Netflix, Airbnb, and IBM are just a few of the other multi-billion-dollar tech entities that followed suit. Chief analyst with tech analysis research Bob O'Donnell pointed to computer chip makers like Intel and AMD and financial tech companies like PayPal suspending Russian sales. Epic Games, the maker of video game Fortnite, stopped commerce to Russia but said it was not blocking access for the same reason other communication tools remain online. The free world should keep all lines of dialogue open. Epic Games went on to add that it's exploring a mechanism to allow normal people to still stay in touch. Thank you so much for joining us. That's what's happening on the business scene, and you can catch a glimpse of this conversation on our social media handles on Twitter, Facebook, and YouTube at Metropol TV Kenya. And from me, Tabitha Muthoni, and our sign language interpreter Susan Otieno, and the whole team here that made this live broadcast a success, we say thank you and have a good night.